Thank you everyone for coming today. We going to our second day, and then we will have two sessions today. First session will moderate by Mr. Chul Yu Kim. He's a Deputy Dean of ADBI. And the second one, this will be moderated by Derek Hondo. So please stay until the end, because we're gonna have a closing and then we explain how to move forward. And I think for without further ado, we can going to the photo session. So please open your screen, and then Derek will take a picture of all of us for the second day. And yes. So everyone there, Pak Chaikal, could you open your, switch on your video? Okay, I think Derek, you can take picture now. Okay.
Okay, is everyone here? Okay, ready? 1, 2, 3. Okay, one more. 1, 2, 3.
Okay.
Okay, thank you.
Thank you. Thank you very much, everyone. And so without further ado, I think we should start our session 3, and then Didi Kim gonna lead the session. Didi Kim, I give the floor to you. Thank you.
Okay, thank you very much, Nalla, for the kind opening. Welcome again, and good to see you again. Today is the second day of the ADBI Policy Maker E-Training. Following discussion yesterday on financial inclusion, financial literacy, and financial education in general, today we are more focusing on technology, digital technology, especially how we can harness this digital technology for the sake of advancing financial inclusion, and what are issues to overcome in order to do that. As you know, financial inclusion through digital financial services was a development priority well before the COVID-19 crisis. But the global COVID-19 pandemic and the ensuing emergencies have reinforced the urgency of using digital financial services to preserve the functioning of the financial system and the security of people during the difficult period of the declining demand, reduced supplies, and tightening credit terms. There are challenges to accelerating digital finance, however, and increasingly an understanding of how to overcome these obstacles and reduce risk. The first is the importance of the access to digital technology and infrastructure, which is the foundation of digital development. This starts with the access to key digital tools, such as the mobile phones for consumers, especially the vulnerable, and the digitalization of the business process for the small and medium-sized enterprises. Other elements of the digital infrastructure and policy essential for the achieving financial inclusion involve digital identification and electronic know your customer KYC technologies. So in order to facilitate the benefits of digital finance, many things, many policies, many measures are required in terms of the government policy, and regulation, and digital finance literacy, and so on. For instance, digital payments can help governments quickly and securely make cash transfers and other socioeconomic benefits in the form of financial support when it is accompanied by widely available infrastructure and enabling regulations. The issue of the digital divide, data privacy, and consumer protection also should urgently dealt with as well. So this session is intended to discuss these issues related to digital financial services in the context of the COVID-19. We will have a guiding presentation by the expert, followed by the country case study of Fiji. This will provide international best practices as well as local context tailored to specific country circumstances. After hearing 2 presentations, we will go into questions and answer session. To do that, please write your questions and comments and feedback, whatever, in the Q&A box on the screen. Or if you want to directly speak to a panelist, please click raise your hand button on the Zoom screen. So I will notify and then I'll give you a chance to speak. So without further ado, I'll invite Mr. Kanitha Thamburanchai, Chulalongkorn University of Thailand, to give us overall picture of the digital financial services and COVID-19. Dr. Kanitha, are you ready?
Yes, thank you very much.
Please make your talks around 15 minutes, right?
Okay, all right.
The floor is yours, please.
Right, thank you. So good afternoon, everyone. So let me share my presentation from my screen so everybody can follow along. Can you all hear me clearly?
Yes, we can hear you. Yeah, please go ahead.
Right.
Yeah.
Okay. Okay. Right. So my talk today is going to be on digital financial services and COVID-19, and it's going to be more of a broad overview of the issue. And if you have anything to discuss, we can discuss it later after the presentation. And so I just want to recap for everyone that finance on financial services plays an enabling role in almost all aspects of our lives. And regardless of whether or not we're using digital technology or anything else, the 4 core basic banking services are needed by both households and businesses, whether the businesses are large businesses or they're small businesses. So when there's income coming in, we need deposits. And when we have a need for extra liquidity, we apply for loan services. And once we have enough financial background, we can prevent ourselves against risk by using insurance. And when we want to settle bills or send money to loved ones and family members who live far away from us, we also utilize payments and remittance services. Now, digital financial services is defined as financial services that rely on digital technologies or fintech for their delivery and use by consumers. Now, in the past 5 to 10 years, there's been a lot of technological innovations and a lot of changes in the technological sector. And of course, that also applies to financial technologies. And so this means that even though the 4 core basic banking practices are still the same, the way that they are delivered and the way that they are used by consumers has changed quite significantly. And financial technology has the power to touch all aspects in the delivery and use by consumers. And so that also means that there are changes to be felt from digital technology from both the service provider's side and also from the consumer's side. So from the service provider's perspective, fintech allows for changes to business models and also allows for new business models to happen. Fintech also allows for novel applications and processes to be in place in terms of the provision of financial services. And because technology has changed in such a way that it now opens up the floor to firms to provide financial services who are traditionally not financial institutions. So we are increasingly seeing technology companies coming into play in providing payments services and remittance services. And there are also in many countries the role played by telecommunication companies in the delivery of financial services as well. So competition is now very, very intense, and not just from the traditional banks, but also from people who were previously outside the financial sector coming in to provide financial services as well. Now, obviously, for consumers, digital financial services leads to an entirely new experience. We have increased convenience in our ability to access financial services, and we do it in such a way that we can do it from the comfort of our homes, which is very, very convenient. And with new data that's being generated from all these financial technology products, from online platforms and from mobile platforms, there's also the ability of consumers to get their hands on more tailored financial products. And obviously, when we have the ability to bank ourselves through our mobile phones, there's also improved access, because we no longer need for them to be an agent nearby for us to access financial services. All we need to do is hook up to our mobile phones, we log on to the internet, and we have the ability to access financial services. Now, of course, within COVID-19, everyone is experiencing a new normal. So a new normal in all aspects of our lives. For example, we have to observe social distancing rules, and we have lockdowns in many countries for short periods of time, or even still in place in many countries around the world. And also with the new normal in terms of social distancing, we also have the new normal in terms of the economy. COVID-19 has led to one of the great recessions the world has seen in maybe 100 years or so. And it happened very, very rapidly, more so than previous recessions in the past. And so we're dealing with a new way of living, as well as a new normal for the economy, where the great lockdown, as the IMF calls it, has impacted almost all countries in the world in a severe manner. And so with this new normal, what we do is essentially we do everything that's mediated through technology. We socialize online, we shop online, we're even having meetings online, on taking online classes. And so everything we do is mediated by technology, and the same goes for digital financial services. McKinsey report has estimated that COVID-19 has sped up the shift towards digital finance for both businesses and consumers. And the speed has been that what would normally take years without COVID-19 is now happening in the matter of weeks and months. So the speed of the change in terms of the use of digital financial services for all the stakeholders has increased greatly. And so overall, across the globe, in both developing and developed countries, there's been an increase in the adoption of digital financial services. And so now I'm going to talk a little bit about what have been some of the drivers of this change, and what role can COVID-19 play in the new normal of the economy. And so let's first look at the drivers. So one of the drivers for using digital financial services has been the worries that coronavirus could be transmitted through cash and coins. And so this had led to a number of changes. Number one, let's take a look at this graph. So this is from Google Trends. So this is the search intensity on the topic of COVID-19 on cash. And you can see that from March this year, the search volume increased by quite a lot, and it's still quite high today, even though not as high as back in March. And so because people were scared to use cash, this had led to a number of developments. Firstly, consumers themselves preferred to use contactless payments methods, or anything that doesn't use cash. Secondly, central banks had to come and assure consumers that using cash is safe, and so it led to many central banks quarantining banknotes, ensuring that banknotes leaving the central banks are free of the COVID-19, the SARS-CoV-2 virus. And it also led to many central banks to relax rules regarding the use of digital technology and digital financial services, so that people could more and more access digital financial services because of this fear of cash. And also, when we have lockdowns and social distancing measures, digital finance prospered because it was a safe way, a virus-free way to continue financial transactions. And so this led to everything from payments, person to business, shopping online, business to people payment, paying your employees and so forth and so on, and even person to person payments, paying your friends or paying your family members, transferring to your family members. And there's also offers of loans and insurance done also online because bank branches were closed, or there was limited access to bank branches. And so for people who are in need of liquidity, the digital payment, the digital channel was often the one that they go to. And there are also new insurance products that are also sold online. And there's been a proliferation of COVID-19 insurance products in the past few months as well. And to facilitate all this increased volume of activity of digital financing, central banks across the world have enacted measures differently depending on the different in the different conditions in the different countries. But essentially what central banks did was they tried to reduce transaction fees so that online payments and online services could be accessed in a way that was less costly. And also there was also an increase in balance and transaction limits so that more and more transactions could be done online. And also in terms of know your customer, they have more flexible know your customer onboarding so that new service providers could enter into this field and old service providers could continue to provide the services to a wider array of customers. And so these are some of the measures that's been enacted by central banks around the world. Now, of course, the Deputy Dean was talking earlier about economic stimulus measures. And so COVID-19, from an economist perspective, this is one of the great recessions in the history of economics. And it's happened in such a way that it very quickly went from a strong economy around the world to a world economy that's in a recession. And so within a few months of COVID-19, governments around the world issued stimulus measures. And from May 2020, the total amount of stimulus measures totaled $8 trillion around the world. And that's divided into public sector loans and equity injections, guarantees to ensure that businesses can keep operating, and also higher spending and foregone revenues just to prop up the economy so that the recession isn't felt too badly in many countries around the world. And so you can see that fiscal stimulus in G20 countries, so the green one is G7, the blue is other G20. You can see that in 2020, the size of the fiscal stimulus, even though it's only been not the full year, the size of this fiscal stimulus in all countries combined is much larger than the ones in the hamburger crisis from 2008 to 2010. So you can see the severity of this recession and also how much money the government is willing to inject into the economy to prop it up. And so one of the ways that you can quickly transfer money to all the people who are affected, both households and businesses, is through the use of digital technology. So you can deliver it in a timely fashion. You can deliver the help money, the stimulus packages in a cost-effective way. And there's also a chance to reduce corruption because if you use cash payments, there's a chance that it could be deducted by parties along the way. But if you use direct transfer payments using digital technology, there is less of a chance for corruption to happen. And so all the money gets spent, gets delivered to the people who are intended to use that money. And so this is how digital financial services can help. But of course, there are many, many benefits to be had, and it really helps us a lot in terms of being locked down, on being in social distancing measures in times of COVID-19. But there are important caveats that needs to be said here. Number one, digital financial services doesn't happen automatically. The Deputy Dean talks about supporting infrastructure, and a lot of supporting infrastructure is needed for digital financial services to take place. People have to have access to mobile phones or the internet through their computers, and there has to be access to networks. Networks and internet is essential, and also for electricity, because you cannot use electronic devices without electricity. And for some developing countries, access to electricity is still a problem, especially in the far rural areas. So all of this needs to be addressed for digital financial services to fully help everybody in the countries or in society. Now, secondly, infrastructure is also needed in terms of the regulations, because when you have digital financial services, when you have new technologies coming in, when you have new service providers, the regulations that are in place, some of them no longer support the new financial services that are being proliferated at the moment. And so regulations needs to be enhanced or modified in order to suit the context. And this is being done at a great speed by central banks around the world and also by regulators around the world. Now, the second thing that we also need to be aware of is that we need to be quite wary of providing financial inclusion to the vulnerable populations, because digital financial services greatly helps people who use them, but it mostly helps people who already have access to finance. And so when you have unbanked people who don't have much knowledge on the technological front, then using digital financial services could lead to a greater barrier of entry for these people. And so we have to be very wary that when we are promoting digital financial services, we don't exclude the unbanked and also the older population groups who might not be as technology savvy as the younger generations. Of course, there are concerns about data privacy. In order to have greater, more tailored products, service providers need access to customer data. But what the divide between privacy and allowing service providers to use the data is also something that needs to be treated quite carefully. And so that needs to be considered by policymakers in terms of the use of digital financial services as well. And also because we have novel ways of providing services, and we have new products that are coming out. One of the things that needs to be considered also is how to protect both the consumers as well as the service providers. How do we protect both these parties from fraud? So that's also something that needs to be settled in order to have full utilization of financial services in terms of the digital financial services. And so let me just conclude that in the times of COVID-19, COVID-19 has greatly sped up the process of financial digitization for all the stakeholders involved, whether or not those are households, consumers, whether you're a large business or small and medium-sized business, and whether or not you're a financial service provider. COVID-19 has sped up the process for all the stakeholders involved. And there are many benefits to be reaped both to the users as well as to the service providers. First of all, we are able to enjoy relative comfort in the times of social distancing and lockdowns, because digital financial services has facilitated life in the new normal. We can shop for grocery online, we can talk to our friends online, we can go to school and attend classes online. So all these has helped quite a lot, because digital financial services has enabled us to interact using digital technology. And digital financial services also helps cushion economic blows for shops who previously were offline only, if they could go online and they could receive payments through digital channels, they have less impacts from COVID-19. And also in terms of government transfer money, if you have access to online services, government can transfer money to you directly. And so it helps cushion some of the economic blows. But of course, in my previous slides, I mentioned that there is more work that is still needed in terms of both technology, in terms of ensuring financial inclusion goals, and in terms of the regulations that needs to follow the changes in the technological front. And so that's it for my presentation today. Comments and suggestions, welcome. And if you have further comments and suggestions, you can email me at this email address. Okay, thank you.
Okay, thank you very much, Dr. Kanitha. Very, very informative and enlightening presentations touching upon the important aspect of the current situation of the digital financial services, and then in the future. So you talked about the increasing use of the digital finance services in tackling COVID-19 situation, and also in order to equip us, we prepare for the new normal after the pandemic. More works are needed in the areas of the building infrastructure, facilitating the financial inclusion, and then having more proper regulation and so on. So those are very important the issues that we need to tackle in the future. Thank you very much. Your very excellent presentations. Now it's time to hear the country presentations. Fiji, so Pacific Island. So to do that, we have two eminent government the officials from Ministry of Finance Fiji. So we have two, actually the Fiji government officials, who is Randir Prakash Charan, head of the administration, and then secondly Jotami Yabakivitu, senior administration officer. So both of you will have around, 10 to 12 minutes to share the experience in Fiji with regard to these important issues. So with that, I'll invite first Randir for your presentation.
Thank you, Dean, and good evening, everyone. Just let me share my screen with you all.
Sure, please.
Just give me a second. Yeah. You can see the screen?
Yeah, then we can see you.
Okay, lovely. Thank you very much. And let me present the status of financial inclusion in Fiji. So I have Jotame here with me, and myself will be just discussing in very briefly how Fiji has done financial inclusion in the country and as well as post COVID-19. So basically about Fiji, I think it's one of the safest place to be at this point in time when the pandemic is affecting every country. We are a small country in the South Pacific, but we have really maintained all community spread. We have no community spread coronavirus cases. All is quarantine border cases. Basically, our economy is based on tourism, and it has been drastically affected after the pandemic. And we are also dependent on agriculture. Our national greeting is Bula, and on the side you can see pictures of our national traditional drink, which is kava. So moving on to financial inclusion, in 2009, the Reserve Bank of Fiji and the government in collaboration set up a task force, which was tasked to look at how to increase financial inclusion for not only for males or in the urban sectors, but also for women and people with the physical challenges. So there was a group formed with the chair being the Reserve Bank governor, and also there were 4 working groups that was formed, which is financial literacy group, inclusive products and services, inclusive insurance group, and statistics groups. So this group was tasked to set up financial inclusion in Fiji, and they came up with a plan, a strategic plan, which was first done in 2010, and then the second plan was done recently in 2016. One of the key addresses was 7 key priority areas that the plan looks at, which I will discuss in my presentation in the next few slides. However, it was noted that during the 2015 demand side survey that there was only 36% of adult population, which that more than 36% of the adult population, my apologies, were not in the finance formal finance sector. So the strategic plan's target was to increase the financial inclusion, especially for women and people living with disabilities. So when we compare Fiji in terms of other countries such as Philippines and Indonesia, this data was again captured from the demand side survey in 2015. You see Fiji is quite well established, except for racing with the upper income countries. Our country is quite well established in terms of financial inclusion. However, there's a notable noting there that the inclusion of female is less than the males. Now, one of the things I'd just like to stress at this point is that Fiji being a multinational country, our demography is such that most of the islands and most of the people live in rural areas and are agriculture-based economy where they have irregular incomes. So for that good reason, most of the ladies are more into allowing the head of the family, which is the man, to have an account, and they are dependent because there is no equal income, so they don't even worry about having a bank account. And secondly, banks are located far away from these rural settlements, so reaching banks was another difficulty. And as the earlier presentation by Kanita has mentioned, digital technology has been always limited in rural areas. So we are, in terms of other countries, we are well established in terms of financial inclusion. In the South Pacific, a very good demonstration there of how we have established ourselves. You can see Samoa is one of the countries Pacific where female inclusion is higher. However, as I stressed, Fiji's inclusion has been low with women because of the irregularities or major points that I have mentioned before. Also, as Kanita has mentioned, when there is a low level of knowledge, then the financial literacy is low and people don't open bank accounts. Most saving accounts are done through families and friends. So that was one of the reasons you see. But on the wider scale in the South Pacific, I think we are doing quite well. Also in Fiji, you see 1/3 of the population is financially excluded from the survey. And this data was 2015. In 2020, now 5 years down the line, there can be some bigger changes with a few other things that are happening, which I present in the next slide. So the key areas of the strategic plan were 7 key areas, the first being the empowering women. And this was to improve access and usage of quality of financial services and products. The second being strengthening the financial sectors. And the third being improving on enhancing on the DFS systems, digital financing systems. Also, the fourth strategic goal of the strategic plan was to provide affordable and accessible relevant financial services and products, and also increase and improve financial literacy. I think all the action points that are mentioned there will be covered well with from my colleague here, Jotame, who will express how we have achieved in those areas. Likewise, the 6th and the 7th were being private and public collaboration of partnership and data measurement, being the 7th one. Also, I would like to mention that in terms of Fiji's financial inclusion, taking credit from banks is quite low, and people primarily depend on credit sources such as friends, families, and shopkeepers. Remittances is one of the most reliant thing that we will look at now in the post-COVID. However, the women are also receiving remittances, which is a good part. But the amount of remittance coming in is quite low again. The knowledge of insurance is quite low. So all these things are well captured through the strategic plan that is established by the task force, and they take care of it. I hand over to Jotame to continue the presentation from here onwards.
Okay, thank you, Ranjit. As you may be aware, from what we're trying to illustrate here is the achievement or the status of the financial inclusion in Fiji based on the strategic plan that was earlier illustrated by Mr. Ranjit. So as of end of 2019, you'll notice on the slide some of the achievements which Fiji has managed to achieve despite the strategic plan was a 4-year plan, meaning that 2020 would be the end of the period in which the plan with the intended achievements was to be analyzed. So on the screen, you have from those unbanked, from those that are still excluded from the formal finance sector. The 2019 report has indicated that there has been a huge achievements made through the targets that has been achieved. More people are into not only insurance, but credit and mobile money usage. There's been more access to formal financial services. The increase from, it has increased to 76, almost 80% as at end of 2020. Okay, our target for the 2016-2020 was 80%. But now we have, as at end of 2019, we have achieved 76.8%. Okay, likewise for, in terms of the figures, we are trying to get everyone around about 130,000 adults or citizens to be in the formal financial services by the end of 2020. Also, one of the major achievements was the launching of a 24/7 online electronic register. So this is being used by all the financial institutions, more connected to this electronic register, and also the personal property securities registry, which allows lenders to file notice of security interest on only on movable assets. This is excluding land, building, which are pledged as collateral for loans in the financial sectors. Okay. Additionally, there have been a positive reaction and comments from viewers on our financial literacy program. We have a TV program, television program on the national television on the Mandai level in the local dialect. It's translated as our money. So there has been more the reaction and comments from the wider public has been positive. Also, the introduction of the electronic money, e-money, FPOS, and internet banking. There's been more interest in this area of focus lately. And lastly, the government assistance on, there has been, this was one of our case study, government assistance in the, for those in the informal sector that were affected during the COVID-19 crisis, so the lockdown areas. Then we have noted that there are so many people are now, because it's the informal sector, so most of those that are engaged in those businesses are usually outside the formal financial services. So during this period and this assistance, it has somehow roped them into the financial sector, not only through bank accounts, but also through the electronic transaction via the mobile network. In Fiji, we have it as M-Pesa. Okay, we want to reflect also on the challenges on post COVID-19. While Fiji has been affected, you'll notice from the earlier discussion by Mr. Reddy that Fiji relies on tourism. So when the borders were closed, there were heavy job losses. But then when the state intervened through financial assistance to those that are wishing to, those that wish to move into niche markets and more into small business and and other services, the requirements was they have to be in the formal financial sector. So it has also assisted in getting those numbers to be included in the formal financial sector. So we have stricter requirements on opening of bank accounts from commercial banks, and also reducing banking services based or due to the COVID-19 challenges. Branches in the rural areas or semi-urban areas were being closed, meaning that for citizens, they are channeled towards other means of transactions, like I've said, M-Pesa, something similar to the Kenyan model that was discussed yesterday.
Mr. Botami, can you wrap up your presentation in 1 or 2 minutes?
Thank you. So on the slides, you'll notice that now citizens in Fiji are more into e-money now, or M-Pesa, the mobile digital world in which you can have access, you can settle for bills. This is what, like I've said, on the contrary, COVID-19 has brought to Fiji. Yeah, and again, some of those interventions that were made by the government and companies to assist citizens during this period. And that's about all, or the status of the financial inclusion program in Fiji. Thank you.
Thank you very much, the government officials from Fiji for presenting financial inclusion situation, especially in the context of the COVID-19. So thank you very much for the information. And then also we noticed that the Fiji has achieved significant progress in this regard. But again, there are lots of things to do to further promote the financial inclusion, especially in relation to COVID-19. So with that, I'll invite Dr. Kanitha to provide some feedback comments on Fiji's financial inclusion status.
Right. So first of all, let me congratulate Fiji. It seems you're doing quite well in terms of the peers, the countries in your peer group, in terms of financial inclusion. And so I'm happy to see that the financial inclusion plan looks at all aspects of what good financial inclusion should be. So you're looking at affordability of the provision of financial services. You're looking at the provision of appropriate financial services and products. You're looking to expand financial inclusion, and you're also looking to educate people in financial literacy to ensure that they're able to engage with financial services in a way that is beneficial for them and also for society as a whole. So I think that the plan, the objectives of the plan is very well-rounded. So I congratulate you for that. Also, it seems that there is more work to be done, obviously, for the 20% of the population who still do not have access to the formal financial service. And also it seems that encouraging women to have their first foothold in the formal financial inclusion ladder is still something that your country needs to address. And so that comes to that I have a few questions for you, actually. So my first question is, what is the government doing in extending access to financial services for women? And also, you mentioned that the government is interested in getting financial inclusion for disadvantaged groups and disabled population as well. So I'd like just to hear your country policy in how to get financial inclusion for those populations as well?
Thank you for the question. Because of time constraints, we weren't able to fully highlight some of those activities that are currently happening in Fiji. Women participation in business Fiji is quite how do you say, very not so minimal, but it's very we can really visualize now the heavy participation of women in business. We have certain programs that are currently underway. We have women in business. We have policies that are laid down by the state, by the government on equal opportunities, on ratios and gender ratios at all levels of the organization, not only at the formal sector, but also the participation in the context of business participation, and in all different modes. They have groups. They form up cooperative societies. They have their micro credit schemes. These are all well supported by governments, and we also have all those programs in place in which we have the recognition programs that we have for women, especially the women, the exporters of the year, all those different models of categories of prizes in which are used to recognize the participation of women. We will be sending all those access with web links, which you can also view all what I'm saying, elaborating now.
Yeah, thank you, Zata. Just to add on, for women, one of the greatest achievements done by the government in 2015, I believe, was in the rural sectors, was when the leased money for land leased by many corporates was being deposited in a special fund and then given to the village headmen, or what we call in the local language Matangalis. But what has the government introduced now is that the landowner is directly getting this money, and what we have seen is a paradigm shift towards women opening bank accounts, because this is the first time women are receiving money at hand. So at the moment, I think formal bank accounts range around 45% of women. And as Jotam has mentioned, there are many initiatives. For physical disabilities, recently the Reserve Bank of Fiji had a 6th Pacific Regional Conference on Disability at Nadi, where there was a conference, and in the confirmation, in the conference, a presentation was done by the bank on account ownership for physically challenged people. And there was a commitment made that there will be more support, more inclusive movement made for physical people, extending of collaborative efforts to generate relevant and needed evidence in mainstream disability and development of gender equality and women empowerment. So these were a couple of other commitments that we'll share through that document, where a lot of commitments made by this Reserve Bank of Government to improve financial infrastructure and things for disability people.
Okay, so it's okay?
Yes, thank you.
Okay, thank you very much for the comments and also the response from the Fiji side. It's very, very important, I think. So now it's time to open the floor. Again, I encourage all the audience or participants to write questions in a Q&A box, or if you want to directly speak, just raise your hand, click the raise your hand button. And then I notice that, and then they'll let you to directly speak. I encourage you to do that for the active discussion. I received a couple of questions from the audience in written format. First question is from Manju Kumari, Dakar. His question is that, okay, so given the developing countries' circumstances related to infrastructure, especially of phone network and so on. Is it possible to enhance financial inclusion through mobile banking? As well as also women are far away from the using these services. So how can women's technical capacity be ensured? I think Dr. Kanitha, you can answer these two questions, developing country and the women's capacity.
Right. So for developing countries, I think in many countries, the infrastructure still doesn't support internet access for everybody in society, and so if the infrastructure isn't yet there, and in this time of COVID-19, where there is an increased need for financial services, it might be better to look at other channels to provide financial services that doesn't require the infrastructure to be in place yet. So for example, in many developing countries, there is that agent networks. So if you don't have banks in the area, you could have agents who, for example, there could be convenience stores that is available in almost all places, or it could be just a local grocery store that could serve as an agent. So that might be the channel to go when you're waiting for the digital financial infrastructure to be in place. But however, I think in most countries, people do have access to mobile phones. The internet might be spotty, but if you do have access to mobile phones, and if the internet works to a certain extent, and if you do have a mobile signal, you can do the same thing as in Kenya and Fiji, where you have M-Pesa that allows you to bank without the use of the internet, but you use the telephone signals. And so that could be a way to go as well. For women, there's been a lot of work in terms of getting women to be banked. So it could be that you could start off by using through women's groups, encouraging them to save and to open bank accounts. So I think it's usually when something is new, it's usually easier to get people on board when they do it in groups. And so if you start encouraging going to women's groups and telling them about the benefits of having a bank account and so forth and so on, then that could be a good starting point. And once that happens and people start to see the benefits of having a bank account, then it's easy to proliferate. But I think getting the first hurdle, getting over the first hurdle is going to be important.
Okay, thank you very much. There is another question regarding financial education. So the suggestion is that the financial education should be more focused on the kind of the digital education in terms of the promoting the digital financial the services. So first, I'll ask Dr. Kanisa to respond that. On the relate to that, I'll ask the Fiji side, saying that we noticed that the Fiji has very robust program of the financial education. So then in this financial education program, how, do the digital aspect included in this financial education program? So if you explain the things, it will be very helpful. First, I'll ask Dr. Kanisa.
Okay, right. So in terms of a digital education, that's very, very important. So I think with digital financial services, you need both financial literacy in the normal sense and also digital literacy, and especially digital financial technology, because digital financial literacy, because you now have new types of financial products, you have new ways of engaging with the service providers, and you also have additional issues about data protection and also the security of your transactions when you do things online. And so these are additional things that needs to be addressed when you're giving financial literacy training. So a new module, I think, needs to be added because of the new ways that you're interacting with the financial service providers. Yeah, but very, very good point.
Okay, so what about the PG side?
Oh, I think your microphone is off.
Yeah, please mute your microphone. Yeah, please. Yeah.
Okay, as we have discussed earlier on the presentation, we have those television programs that are aired on the national television. Okay, that can be accessed on the website of these task force as well. At the lower level, at the educational level, we have curriculums that are currently in place at the primary school level, at the early stages of schools from year 1 to year 6. So you have all those in the curriculum. What the Ministry of Education is currently doing in Fiji is digitizing it so that it can be accessible on the website as well. But like mentioned earlier, the challenge is how you take it out to those that don't have access, regular access to the network. I think Mr. Randir might want to add on.
Thank you, Jotame. Just to enhance knowledge on digital financial services, there is this financial literacy working group under the task force that is entitled to do these things. So I think apart from what Jotame has suggested, there is a group of banks that have come collectively together to educate all the corporate sectors and educate rural sectors, as well as they are visiting, making road shows, educating on financial literacy. So under their package, they include digital services as part of the package.
Okay, thank you very much. So because of the time limitation, I have only one more questions. So this question is from the anonymous attendee from the Nepal. So like every country, Nepal is also suffering from the dilemma between the lockdown and the economic behavior. So this is very general, the question. How can other government, they overcome this kind of the dilemma between the containing COVID-19 and then also promoting the economic behavior. This question goes to Dr. Thenika, because Thailand is one of the best country to perform these the two functions. Also related that, could you tell us your thought that what is the future of the digital finance after the pandemic? So still the digital financial services will flourishing like this time, or it will be, the subdued after the pandemic?
So let me address the first question on the lockdown and the economy first. It's a very, very big challenge, and I think nobody has a good answer as to how to balance the two. I mean, even in Thailand, we've been quite successful in limiting the infections in the country, but we're suffering massively because our economy relies on tourism in a very, very big way. And so I think we're suffering, more than many countries who haven't been so successful in containing COVID-19. And so I think in terms of Nepal, I think everything helps. So firstly, ensuring that the economy can still function by taking a lot of the offline services online, that helps a lot. So when Thailand locked down, it happened in a matter of weeks. And so a lot of the shops who were previously offline only, they had no customers at all. And so there were a lot of marketplaces that happened through social media, for example, Facebook and Instagram, where it served as a platform for people with things to sell to go online, and it links those people with the customers, and it helped a lot of the small and medium-sized businesses that way. So you don't actually have to have like an Amazon platform in those countries, because sometimes it's not available. But if you can use social media channels and use that to create a platform where customers and service providers can come and meet, that helps some of the SMEs. And also, if that is not enough, sometimes the government might need to consider about letting some people outside. For example, the less vulnerable population, the younger population groups, maybe they could be allowed to go out and spend. And so that would help to prop up the economy quite a bit. And obviously promoting digital financial services in conjunction with all of that, so that happens more quickly, it's also going to help. Right.
Okay.
So right.
Please go ahead.
Sorry, in terms of the Deputy Dean's question on digital financial service, I do think that because it's so much easier to do everything through digital financing, I think the future is going to be bright because people are now used to it. A lot of people have overcome the barriers because of the health threat. And so I think in the future, there's going to be more and more service provisions through digital channels.
Okay, thank you very much. So any comments from the Fijian side regarding the lockdown and the economic activities? Please unmute your microphone.
Okay, something that was that has been learned in we have learned the lesson the hard way. Fiji is something similar to what the earlier comments, dependent on the tourism sector. But now I think it's the context in which people are now thinking outside the box to survive, not illegally, but within the resources and within what they have at hand. So for how long? That is the question that will be answered later.
Okay, thank you very much for your very good answers to very general questions. So with that, I think it's time to close this session. It's very fruitful discussion on the digital finance in the context of the pandemic. So I really thank Dr. Kanitha to providing very informative, enlightening presentation. Also for the Fijian government officials to share the Fiji's experience on the financial inclusion program. Will be very helpful in charting next steps. So with that, let me ask all the audiences join me in thanking Dr. Kanitha and then the Fijian government officials for sharing their insights. Thank you very much.
Thank you.
So over to Nella.
Thank you, Didi Kim, Dr. Kanitha, Mr. Charan, and Mr. Riyabakitihu from Fiji. You know, I enjoyed the discussion, and then I have a lot of insight. And we, discuss actually the real problem that we have now, and then how the financial inclusion is somehow help them, and somehow we have barriers and obstacles to survive too. So with this, we move to our session 4, our last session for today. Our moderator for today is Mr. Derek Hondo. He is a CBT associate in ADBI, and then for that, I think without further ado, I give the floor to Derek. And Derek, the floor is yours.
Thank you, Nella, and thank you, Deputy Dean Kim. Good afternoon, everyone. And so we'll move on to session 4. Again, this session will focus on fintech and related to financial inclusion, both in developing countries. And our first speaker from Indonesia, University of Indonesia, Professor Chaiko Nuriyakin. He's the head of a research group, the Faculty of Economics at University of Indonesia. He's currently the head of the research group for digital economy and behavioral economics. And his research group has conducted broad research topics ranging from consumer behavior, film piracy, the demand of electric cars, financial inclusion, the macroeconomic impacts of the digital economy, and e-commerce and business formalization. Currently, he's working on a project to increase savings at branchless banking agent. And his research interests are focused on how risk and time preference can affect individual and group decision-making. So Professor Nuriakin, his presentation will focus on financial technology and the opportunity and current state on the platform in developing countries and how it relates to the Indonesian market. So Professor Nuriakin, the floor is yours.
Okay, thank you, Derek Hondo, for the introduction.
Thanks, and you have 15 minutes.
Okay. Yeah, I have maybe 24 slides, and I will just pass some of them. Thank you for the invitation. For me to speak here is very much an honor for me to deliver this topic. Okay, I'll just start my presentation. So, Ibu Nella, I will share or?
You can, Derek, you can open.
Okay,
do you want us to control that or?
Okay, Ibu Mbak Widya will share.
Yeah.
Yeah. Oh no.
Widya?
Okay, let me share my screen. Okay. So everyone already here, my screen. Could you see my screen?
Yes,
Yes,
we
yes.
can see it. If you could go to the presentation mode, that'd be great.
Okay.
Perfect.
Okay, I don't know whether this already been discussed in this training. Yeah, there are actually many definition of financial inclusion. Yeah, as you may know that some of country are stand to what so-called only usage of financial services, but most of the country or even World Bank are going to like bank account ownerships. So this is a difference between usage and bank account ownership. So ownership is different with usage, right? You could access financial services even without having bank account. But actually, these two different definitions would impact a very different and very significant consequences to the economy. So in Indonesia, fintech platform are increasingly being adopted by Indonesians. We have even for lending, we have 659,000 lenders and 25 million borrowers. So you may see that there is a deficit in lenders. But this is just not the case because the lenders is the one who have huge money. So the number is deficit, but the value may be not, yeah, because we have bank channel also to the lenders. And as you may know that in Indonesia in 2019, yeah, we have 249 fintech companies have been registered. So as you may know that within or recently in 3 years from 2017, yeah, there is a growing number of fintech in Indonesia. This is just like a mushroom in the rain season, but most of them are not registered, or we may say that they are illegal, something like that. So actually, even the authorities, doesn't know the specific number of fintech companies in Indonesia, but they do need to register, right, to be officially recognized by authorities. So it's only 249 fintech, but for sure there are, yeah, maybe like more than 1,000 maybe fintech companies operating in Indonesia recently. However, yeah, 43% of them are focused in loan services. Okay. And as I mentioned before, that financial inclusion should not only be covering loan services, yeah, it should be covering saving, insurance, and payment services. what the World Bank says, they define financial inclusion is this not just bank account ownership, it should be later, yeah, stages. We should develop also the payment system, also the access for insurance and access for lending. And Indonesia actually, yeah, we have an improvement in financial inclusion. So this is based on the ownership. Okay, in 2011 we only have 20% inclusion rate, but it increased to 49% in 2017. Nevertheless, yeah, in 2019, yeah, we have like 55%. Young adults in Indonesia who have the banking account. And we have 70%, more than 50%, right? 70% of adults are, have access to financial services. So this is different between account ownerships and usage, okay? So this usage maybe they don't have, yeah, like maybe like 20% of them doesn't have financial accounts, something like that. Okay, next. This is a definition of fintech in Indonesia. So what I want to emphasize is that we have two authorities. We have financial service authorities, OJK, and we have central bank. So for the OJK, they mainly taking care of financial services that done by bank. But for central bank, they control the fintech company, okay? Something like electronic money or financial services that is over by telecommunication company. So yeah, I don't know whether it's also happened in your country, but these two authorities sometimes have a different opinion about financial inclusion and so on and so on. And this is the definition. I just passed this one, and we have OJK regulation for fintech. We have also Bank Indonesia regulation for financial services. Okay. This is the various type of fintech. Yeah, we almost have everything. Yeah, everything financial technology in Indonesia, from payment, insurance, point of sale, lending, accounting, cryptocurrency, blockchain, crowdfunding. Everything are available in Indonesia for fintech. So what improvement can be made in the running program to accelerate Indonesian financial inclusion? So for you who still may be unfamiliar with Indonesia, we are archipelago country. Yeah, we have also like mountainous area. So mainly we have, individuals or households who live in the very remote area, in very far away from the Jakarta capital city. Okay. So this is global practice, yeah. Maybe you already know. Then we have bank-led financial inclusion, and we have on the other side telecommunication company-led financial inclusion. Okay, so Indonesia is mainly based on bank-led financial inclusion. That banks appoint business entities, yeah, informal business entity to provide financial services. So this is mainly branchless banking. We call it Laku Pandai. It was launched in 2014, yeah, and this is also partially adopted in India and Pakistan. What about telco? We have telecommunication company who are the main driver of financial inclusion, but yet this is not prohibited, but actually, because in our country, Bank Indonesia is non-bank institution is prohibited to hold community money, okay, to hold the money. So only banks could provide saving financial services. So banks and maybe like micro financial institution, but non-bank like telco, they cannot, have holding the money from the people. And we have fully adopted in Kenya. We have M-Pesa and Swari. Actually, M-Pesa is telco based, but M-Swari is actually the cooperation between telco and banks. Okay. yeah, because Kenya also central bank is also prohibit the non-bank to take money from the society. And this is other countries' experience. Yeah, in India, they have a very much advanced know your customer system. Yeah, they have other. This is a fingerprint system. Yeah, that we don't have. Yeah, in Indonesia, in Indonesia also we don't have like integrated KYC system with the national identity number. That's the problem for people to open the bank account. And the India also, they grant telecommunication company to operate as a payment bank. So in order to create an environment for a telco company, India creates something like a payment banks. So actually they also prohibit, right, non-bank, but they create this one, a payment bank. So ensure the prudence of the payment bank system because the existence of other, they could easily do the KYC process because everyone may go already fingerprinted, right? And it seems that Nigeria will start to adopt this India system. And yeah, I've already said this, I think. I just go past this one. And in Kenya, yeah, they implementing collaboration with MNOs and bank. M-Pesa, and this established in 2007. As you may know that the Nigerian financial inclusion is increased significantly from 2014 to 2017, right? Because they use this telco who cooperate with banks. So what Indonesia can do, for sure, yeah, because for your information, since 1998 financial crisis, it is prohibited by central bank that the banks operate in at village level. So this prohibition is because they are very reluctant to promote banks access. And also to the risk of the stability of the financial inclusion. So the banks only could operate in district level, okay? It means that the village, the outer village or the remote people who are far from the district city or from the center of the district, they don't have any financial inclusion to financial institution to provide them the financial services. So I would suggest that Indonesia should go to telco-led inclusion because for your information that the telco agents, right? Telco agents, the airtime agents is everywhere in Indonesia, even in the remote area. So this agent could be like, you could be appoint this telco agent as your branchless banking. But OJK is somehow prohibit the telco to appoint informal agent as their financial technology platform agent. So a greater advantage why we could choose the telco-led inclusion in favor because Kenya's experiences are going to be more suited than India, and most Indonesian over 15 years old have access to mobile phone. Most Indonesians, even more than 50% of them having smartphone. So this is a huge potential for us to do the telco-led in financial inclusion. And with 95 million of unbanked population, on one hand, a huge digital opportunity from this population on the other hand. So MNOs could be great ability to access remote areas of the country. But the contrary is bank agents through Laku Pandai may be limited to the bank branches. If we use these bank branches, and the ongoing project of Laku Pandai has also several concerns regarding agent provisions, agent incentive, also infrastructure and everything, because much of our village is also remote. They don't have enough electricity and internet. And banks is sometimes also not economically efficient, right, to provide services in a very small denomination value, yeah, and they don't even economically efficient to provide a very frequent financial services. So in this case, yeah, telecom have advantage over banks to do the financial services. Yeah, yeah, MNOs, yeah, are not financial institution. Yeah, their core business is not financial services. Their core business, of course, telecommunication, right? So maybe OJK have concern about this. So MNOs are only allowed to develop e-wallet, and then they also allowed to point only the legal institution, the formal institution, but not informal institution. But banks could appoint that informal institution. Uh, if we use e-wallet, yeah, if we use e-wallet now recently, this is very, I don't know, yeah, many Indonesians are reluctant to use e-wallet as their saving account, yeah. This is very minuscule holders in 2018, yeah. There were less than 1.1% of them are registered e-wallet or e-wallet as a saving account. So what to do is integrating fintech and branchless banking. That's what we propose for Indonesia. Yeah. According to regulation, only banks are allowed to be the formal saving and money holding institution. This one already I mentioned before. And regulatory measures are unlikely to change. Yeah. So this one, I don't think will be changed in the short term. So what to do is the bank are already developing branchless banking also, but they actually branchless banking only exists, yeah, near the bank branch, so very limited financial access to the remote area. And the technological side will need to kick in and aid the branchless banking process. So whether the telco could operate like a bank, or whether the bank could operate like a telco, something like that. So which one is going to be Indonesia will take the path. So people need for a comprehensive and reliable one-stop or universal financial services, but that's not the case. Yeah, we have a very fragmented financial system, and we also have this genius, yeah, BTPN, but this is also bank-led financial inclusion. So within the integration, even more possibility for the financial services can be offered to the remote area. Yeah, so we encourage partnership among state-owned enterprise of the Telkomsel. This is the telco company, national state-owned telecommunication company, and state-owned banks to cooperate to give the Indonesian people a more universal and a more accessible access to financial inclusion. And for Telkomsel, they have also the KYC, right? Because you know that if you pay regularly or billing, yeah, they have the data, right? So Telkomsel could use the database for the credit scoring for anyone who subscribe to their service. So there is also possibility for link aja. This is electronic payment. This is e-wallet to a point informal business. But as I already mentioned, that the central bank is very reluctant to let it go, yeah, to permit the telecom company to appoint informal business, because they are very risk averse, yeah. They are afraid that financial crisis or there will be created instability of financial system. So they don't want to do it. Yeah, they don't want to let the financial services to be conducted by telco. So this
Sorry.
one is,
okay, if you could wrap up in the next minute. Thank you.
By start fostering good ecosystem and also demand side, we have to increase financial literacy of the society and financial literacy of the poor. I think that's all for me. I'm sorry if I passed the time. Thank you.
Thank you very much, Professor Niliakin. Very informative, and shows how much work Indonesia has to do to close the gap between fintech and financial inclusion. So this leads to the next presentation for today. So we have next Mr. Behzad Hamroyev, the head of the department from Department of Fiscal Policy in the Ministry of Economic Development and Poverty Reduction in Uzbekistan. So, Mr. Behzad, are you here? Please, if you could unmute your mic, please. Okay, Mr. Behzad, you have 10 minutes, and then after this, we'll have remarks from Professor Chatkal.
Right. Thank you very much. Good morning or good afternoon or good evening, everyone, depending where you are and what time of the day is it. Right. Thank you very much. I think, yeah. My name is Behzad Hamroyev, and I work for the Ministry of Economic Development and Poverty Reduction of the Republic of Uzbekistan. Well, I have to say that, first of all, thank you very much for everyone who have shared their thoughts and views and the information regarding the state of financial inclusion and education in their countries. It was very, very interesting, especially the cases of Thailand, Indonesia. Well, I can't say the same about Uzbekistan, and I will explain why a little later. Right. Shall I share or I think Vidya, are you helping me with the yeah, thank you very much. Now, the current population of Uzbekistan is approximately 34 million. We are located, the country is located in the Central Asia, which is near, we have borders with Afghanistan, and to the north from us, we have Russian Federation. We don't have border with the Russian Federation. We have a country called Kazakhstan in between. But majority of our migrants work. We used to be part of Soviet Union and gained our independence in 1991 after the breakup of Soviet Union, and we have still some sort of legacy of this communist rule or communist state-owned or state-run economy, and we're trying to sort of change the things. Now the GDP as of 2019 was approximately 58 billion US dollars. That well, the average nominal salary is very low, as you can see. Well, approximately 2.2 million people from Uzbekistan live and work in Russia, and the amount of remittances are, as you can see here on the slide, 4.7 billion US dollars, and overall it's more than 5 billion coming into to Uzbekistan, and that consists actually a sizable amount for alleviation of poverty, especially in the rural areas. and I'm sorry, I have well, the thing is, I forgot to say that my presentation will be well, 3-part. First, it's as you can see, the general information on Uzbekistan. Second, financial system and financial inclusion. If you, next, please. Thank you very much. And third will be financial literacy and education. So second part, financial system. Uzbekistan's financial system is largely bank-based. It's rather over-regulated, according to the assessment of the World Bank, and underdeveloped. We don't have almost non-existent market infrastructure with very limited role of financial intermediaries, and like in all majority of Asian countries, let's say, we have cash-based economy. Although after 2018, situation is beginning to change. According to the data of Central Bank of Uzbekistan, after 2018, the money aggregate M1 started to sort of drop, but it used to be very, very high. Now we have, as of again, this is the data from the Central Bank. As of 1st January 2020, there were more than 20.5 million bank cards issued. I think it's a good statistics. The transaction volume through bank cards, 71 trillion Uzbek sums, which is approximately $7 billion US. So, and there were more than 9,200 ATMs throughout the country. Still, I'd say that the bank services penetration is rather low compared to other countries, especially neighboring countries, let alone developed. The number of bank branches per 1,000 people, as well as number of ATMs per 1,000 or 100,000 people, is rather low. In some of the rural areas, some of the districts of Uzbekistan, there are only 1 or 2 branches of commercial banks. So not all of them are present in some districts, I'd like to say. So the level of competition is rather low. It's being sort of encouraged by the state, but since majority of the banks are state-owned or state-run or state-managed or state-funded, of course, the competition level is rather low. So banks don't have incentives to compete for the deposits from the population. I have to say that the people have very general distrust to savings in institutions, financial institutions in the banks, largely because of the historic memory. Beginning in 1991, I think, or 1990, when we were part of Soviet Union, and even deeper, if we go into history, in 50s, 60s, there were many sort of number of reforms, and people lost money. Even savings, what they've kept in the banks, also were sort of lost. So that was actually, that is a part of a reason people distrust, still have issues of trust with the banks. So majority of people or population saves in hard currency, in dollars, and likes to keep it outside of banking sector. And there's of course there are some other reasons for that, like for example the religious reasons. Uzbekistan is declared as an Islamic country, although we prefer, well, I mean, country is secular, but majority of population affiliates themselves with Islam. So people, some of them, especially in the rural areas, they don't trust and they don't like depositing their whatever they have, I mean savings. And of course there's the issue of inadequacy of funds. I mean most of the people don't have enough money to save. I will talk about a little later regarding the reasons of it. Now the thing is, before 2018 we had cash shortages. People who have had savings in the banks had difficulty in withdrawing their money, their funds. There were very little or limited number of ATMs working, and undeveloped network of EPOS points, points of sale, electronic points of sale. So generally speaking, even with the bank cards, people had a problem with payments. So everyone was insisting on cash transactions. Again, because banks wouldn't give out the cash. So, but as I said, beginning 2018, situation is changing. The government, well, as I said, it's still the reforms are initiated by the state, and still the state is major reformer in Uzbekistan. So we are installing more and more ATMs, and a problem with the cash also solved. The people don't have problems. They have no, whoever has enough savings, they don't have now hesitation to deposit in the banks. It's just the level of inflation rate. I mean, inflation as well as the refinancing rate is, they don't match. So I'd say that people they have financial education enough, not formal, of course, because we don't have, I mean, generally speaking, education, financial education strategy in place in Uzbekistan. formal education.
Sorry, Mr. Bezod, if you could try to wrap up in the next minute or two. Please.
Oh,
thank you.
Okay. Next, please. Yeah, there are 6 private non-bank electronic payment systems. The thing is, beginning 2018, especially after the pandemic, life has sort of proven that electronic payment, the importance of electronic payment systems. So more and more people are using it. Banks are developing their own now mobile applications. So we have a rather good penetration of mobile systems, mobile payments, or internet payments. Savings and pensions, I said here it's a complex issue because, as I said, people have a general distrust, as well as the issue of paying savings and pensions. We have cultural reasons. I mean, generally speaking, elderly people have historically and culturally relied upon the younger generation, their children, on helping them. And so people are getting used to the saving for pension now, and the state has a general sort of a system in place to encourage that. There are barriers to financial inclusion, amongst them rather expensive financial services. As I said, competition between, amongst, well, in the banking system is very limited. Lack of trust, as well as religious reasons, to name a few. Next is financial literacy and education aspect. I have to say here, I've noted that with the case of Thailand or Indonesia, there seems to be rather reliable and extensive data set. We don't have, unfortunately, data in Uzbekistan. General level of literacy is 99%. We have 3 ministries: Minister of Preschool Education, Minister of Public Education dealing with schools, and the Minister of Higher and Secondary Specialized Education, that are generally sort of largely set the policies in higher education, the universities, as well as the vocational education. We don't have, as I said, national financial education strategy, although there were several attempts sort of in collaboration with international experts, but neither, unfortunately, were ratified. I think that's due to, as I said, people who have necessary savings, they are under pressure from the society. I mean, culturally, they have to sort of save for sort of weddings and stuff like that. So, and besides, as I said, for their pensions and for their sort of old age living, they rely upon their younger generation. So that's what I have said as behavioral patterns stem from cultural and historical background. I have to say that it's very, as you can note, my presentation is rather general, but I wanted to share this with you. Nevertheless, despite the fact that the factual data is missing or very sort of outdated, but I'd appreciate your questions and feedback, please. Thank you very much.
Thank you, Mr. Bezov. Thank you for sharing on the situation in Uzbekistan. And seems like there's a lot of opportunities to further develop financial services, both in banking and even, as you mentioned multiple times, the trust of the people, and even financial literacy and education. So thank you very much. And now I would like to give the floor to Professor Chaiko. If you could please present your comments and feedback on Mr. Bezov's presentation.
Yeah, okay. Thank you, Mr. Bezov, for your presentation. Yeah, I think I have 3 points to address. Yeah, maybe first, this is just a statement. Yeah, maybe I think the Uzbekistan problem is on the demand side, right, rather than the supply side. Is it true or not? Because there is no problem of whatsoever about the financial institutions existent. I mean, you can easily find a bank branch, something like that, but the people, the demand side, the household are, reluctant to use it because of many factors that you have mentioned. And because of the demand side, the problem of demand side for sure is more difficult to solve, right, rather than supply side. Yeah, or relatively, because the supply side is also Indonesia. It should be on the supply side, not the demand side. We have a trust on banks, but the financial access for the remote area and remote households is very difficult. That's a statement. For the question is, so how the Uzbek people, do their financial transaction? I mean, how do they save their money if they don't trust the banks? Okay, and how do the business have access on lending, something like that? I just need you to maybe inform. How do general people do their have their needs on financial services to be fulfilled? Okay, is it informal, or whether there is like loan shark something? It is also very, it's a problem also, right? Rather than going to bank, you are going to the loan shark. The loan shark is also have like something like riba, right, in Islamic context, usury, right? So, if you can explain me about what really happened for the general people to fulfill their financial services. That's the first. The second is about trust. Yeah, I think this is a very structural problem, something like sclerotic problems, yeah, because you have many events, yeah, even occasional events that disrupt or distract the trust of the people to the financial services. I don't know. I don't have any recommendation to maybe you just need time. Yeah, you just need time to build the trust again. But for the religion, yeah, whether I expect there is a Syariah bank, Islamic banking. I don't know whether the people or whether there is an Islamic banking operate in Uzbekistan. That's non-usury banking system, right? So maybe if you just put the Syariah bank to the people, introduce the Syariah bank to the people, maybe they could accommodate or they could use this financial services by the Syariah bank. That's the second, what happened to the Islamic banking there. And the third is about, like you said that 2018, there is an increasing something happen, in financial inclusion. but I don't know why. Maybe you could just make me more detail what happened, what really happened in 2018. And also the pandemic. Yeah, the pandemic has pushed people to use, right, to join the financial system. But I would like to know whether this pandemic increasing of the financial services in the pandemic only for the payments, or only for the non-saving transaction. I mean, you just use the financial services, but still you don't trust bank, because you don't save the money there. You only open the bank account, you just use the transfer, you just use the payment, but you don't save. Sorry, I don't trust you, but I need you, or something like that. So yeah, so maybe you can explain about this more. Yeah, is it only for the non-saving transaction, or in general there is an increase also in saving, so that the trust, or because of the force of the pandemic, make the people included in the financial system. Maybe that's all, Derek, from me. Thank you, Bezot.
Thank you, Professor Chaikal, for your comments and questions. So if you'd like to reply.
Yes, of course, I would like to reply, and it's very valid questions, and I sort of exciting to know that people are interested in knowing what's happening in Uzbekistan. Very good. Thank you very much, Professor. Now, the thing is, there were several questions. If you don't mind, I'll answer one by one. I think in Uzbekistan we have something to do on supply, both on supply and demand side. So supply side, I'd say that well, promoting private and foreign capital participation in all segments of finance, and the state is doing taking necessary measures, but again, with this pandemic and sort of sanctions placed on Russia, and we have Russia is our biggest economic partner, and we are inevitably sort of falling a victim on those of that policy of Western countries, and especially the United States. So it's affecting us. But the government is trying, well, taking measures. Well, removing or limiting the use of direct interest rate controls, that's a little problem, because the central bank is rather keeping tight control on the commercial banks, and whatever sort of reforms are taking place in the banking sector, they are initiated by the central bank and not by the banks themselves. And demand side, improving the financial literacy. The thing is, people actually, I would say that the people are very financially savvy, but still there is a matter of financial literacy, because the thing is, as I said, after 2018, there were multiple, well, a growing number of mobile payments and mobile applications, use of the usage hiked, and better they are, better the technology, the higher the financial literacy, or other way around. It's, I think, interlinked. And now how the population saved, it's very informal. It's very informal. Again, if especially in the rural areas, people have, for example, flock, or they have they don't like keeping it in cash, or they don't like keeping it in the banks. So people try to buy some sheep or whatever. In the cities, with a higher penetration rate of banking sector and banking services, people have choice. But especially, I mean, I can't keep any number of sheep where I live. I mean, especially in the block of houses. So
they buy cattle, right?
Cattle, yes, cattle. So that is very informal. And again, state understands this. Actually, one of the kind of measures that the government has come up with, distributing or offering gold, it wasn't offered before, but lately they began offering gold coins as an investment, or gold, what do you call this? Bullions, so you know, the pieces, like 100 grams or whatever, kilogram, still not. But the idea of using a gold as a means to save or preserve the savings or value.
Okay, sorry to interrupt. Just because for the sake of time, I'd like to open up the floor for questions. Open up to the audience for questions, but maybe some things to consider for future development of your paper in Islamic banking, and maybe touching upon the pandemic and elaborating on 2018 and the changes that came along. So I'd like to read one of the questions from one of the audience. Maybe this is for Professor Chaikal. In Nepal, financial institutions are limited in urban areas. There's no financial institutions such as banks, cooperatives, and microfinance in rural areas. In this situation, how can a country like Nepal promote financial inclusion in rural areas?
Okay, first of all, there are two ways, right, in order to give or promote or increase access for people in the remote area. You could use mobile phone, you use telco company, or you use bank. So you could allow banks to appoint, small shops, like informal shops, a very informal shop in your in the remote area to be your branchless banking agent. So yeah, in one way you could just do it there. But actually in Indonesia, this branchless banking is also limited to the remote, because they are, mostly exist in the very near of the bank branches. So we ask them to go to the remote area, but they don't go because banks need to supervise, right? Bank needs to supervise these small shops, these shops. In order to have efficient supervision, in order to economically efficient the supervision, banks only appoint shops they are near to them, to the branches banking. So I would suggest that Nepal just going to the mobile one, yeah. But the mobile one, you need like telephone, mobile phone access, something like that. Indonesia, there's no problem about this. And you need also like the networks, like telecom networks, good internet and good signal for your phone, something like that. So it's better just go to telco-led financial inclusion, I think. Yeah, that's direct from me.
Okay, thank you very much. Let me see. And then we have another question from Piratipan. Piratipan, would you like to ask your question to either of the speakers?
Hello.
Hello.
Yeah, I'm from Deeban from Sri Lanka. This is general questions. regarding the financial inclusion and education literacy. How would COVID-19 affect the global economy, especially the developing country? Our country also developing country. In terms of financial sector, the first question. The second question is that related, how can apply the financial inclusion, educations to recover the economy and financial sector sustainable in the situation? If you have any experience, because in Sri Lanka, we are now control the COVID-19 situation, but we are mostly affected the economic side, not the, the human other. Then I want to know the experience. What are your experience? How can apply recover your economy and those things?
Okay, maybe first, Mr. Bezov, I give you a minute if you want to explain how COVID's affecting the economy in the financial sector in Uzbekistan.
Thank you. Well, of course, it's affecting immensely with the loan repayments, with people withdrawing their whatever they have, cash or savings or deposits, just to sort of sustain themselves, especially considering that majority of migrants have come back, returned from those countries from abroad to Uzbekistan, and the rate of unemployment hiked. So financial, considering that in Uzbekistan, the financial system is underdeveloped and very sort of limited in number, in quality, infrastructurally as well, it affected and economies affected as well. But the thing is, like in Germany or in the States or in some other countries, we didn't resort to helicopter money distribution. We have sort of drafted a special list of people in need, approximately 1.4 million people, and they were sort of supported by the state with necessary funds, and that helped to sort of it gave some sort of dynamic to the economy. That was actually one of the policy measures taken in Uzbekistan.
Thank you very much, Mr. Bezov. Professor Chaiko, if you'd like to reply to either that question or how can financial inclusion and regulation, education help in the economic recovery?
Actually, this financial inclusion is needed more than ever in pandemic, right? Because, government need channel to transfer their support, right? They have, in Indonesia, they have cash. They would like to give to them, to the household, to the needy one. As you may know, that the poorest one in Indonesia already have the bank account. The government have the program called the Family Welfare Program. Only for the poorest, they already have their bank account. But this pandemic is somehow impacted also the middle income, the near poor one. So unfortunately, the near poor one is someone who doesn't have a bank account. So how government could transfer the cash transfer to them? So in Indonesia, it's only 40–50% the household who have bank account. So we have finally what the government do is just they give in-kind transfers. They give goods, they give rice, they give staple foods, yeah, directly to the household. But in-kind transfers, this goods transfer is somehow is very costly. You need transportation, you need to package, you need to buy. Rather than you just give the money, you just transfer the money to the bank account, right? So that's why in recent time, financial inclusion is being pushed by government very, very hardly, because they need to give the money to them through bank channel. That's direct in the Indonesian experience. Thank you.
Thank you very much, Professor Chaiko. Okay, so I think this concludes session 4 of today's webinar. So thank you everyone for bearing with us as we went a little over time. And thank you to both presenters, Professor Chaiko and Mr. Bezod, for their informative presentations on the challenges and opportunities throughout different parts of developing Asia regarding fintech and financial inclusion especially. So thank you very much, Mr. Bezod and Professor Chaiko again.
Thank you very much. Thank you. It was a pleasure. Thank you.
Okay, thank you, Derek. Thank you, Pak Chaiko, Mr. Bezod, and everyone that participating. Now we are in the latest stage of our 2 days event. So, and then thank you for staying with us for 2 days. And before we go into the closing session, I would like to remind you that Vidya has been sending you a message, SurveyMonkey, to do the survey for us. So please help us to improve our service. So please fill out the survey. So I think besides sending in the chat box in here, I think Vidya also send you through email. So please fill out that survey. That will to see how good and how bad our when we host this event. So without further ado, I think I will give the floor to Deputy Dean Chu Kim to deliver his closing remarks for this event. So the DD Kim, the floor is yours.
Thanks, Nella. Thank you so much for all the participants. Personally, I believe we had very rich and enlightening discussion on how to promote financial inclusion in the COVID-19 pandemic era and after the pandemic. We certainly will face new normal after the pandemic subsides. First of all, I'm heartfully thankful for main speakers, Peter Morgan from ADBI, Robin Newham from Alliance for the Financial Inclusion, Dr. Kanitha from the Chulalongkorn University, and then Chakar from University of Indonesia. I also deeply thank the country representative, Sri Lanka, the Philippines, Fiji, and Uzbekistan, who shared their views about the financial education, inclusion, financial literacy in their countries. We all agree that financial inclusion is key to shared prosperity and poverty reduction. It gives access to finance to marginalized people and disadvantaged group, and often opportunity for them to have a better source of income. Most disadvantaged group are women, young adults, and old people, and the residents in the rural areas, and the people with disability. This pandemic added another layer of importance of financial inclusion, as we are still struggling with the unfolding pandemic, and we are likely to face new normal after the pandemic. As I said, people would avoid using cash because of the possibility that the cash can transmit the virus. This situation speeds up the use of financial digitalization. In this regard, I do believe we had very timely and insightful discussion on various aspects in promoting the financial inclusion in the midst of the pandemic. Just a brief takeaways. Despite the significant progress, there remain barriers to improved financial inclusion, both on demand and supply sides. Designing effective financial system that can reach marginalized people while preserving stability and integrity, countries need holistic approach of financial inclusion. That includes, but not limited to, setting up national strategy, building regulatory framework and technology such as digital ID and then financial education, financial literacy, and preserving consumer protection. The framework needs to include all major stakeholders and have better coordinated approach. The design should be adaptable, adjusted with country's condition. Government and policymakers have a lot to support this effort. National strategy, the regulation framework should be in place to enhance financial inclusion. ADB developing countries are in the different level and different stage of their financial inclusion. That is clearly shown in the global fintech Findex database. Therefore, international fora, institutions could help countries by providing international best practices, building network and capacity building activities. In this regard, I hope all participants found this webinar and also more broadly ADBI Policy Maker E-Training program useful and helpful in taking forward financial inclusion in the post-pandemic era. Indeed, this workshop, this webinar is kind of the experiment in the midst of the pandemic, a 9-week-long online course without food and drinks, which requires your more dedication and commitment. I do hope this workshop, this webinar was able to achieve its intended objectives, helping policymakers and practitioners to deepen understandings of the issues and challenges in financial inclusion, to sharpen skills to address such challenges. Just an announcement for participants from the Sri Lanka, the Philippines, Fiji, and Uzbekistan. Thank you for your attendance. Please don't forget to submit your final paper by October 14th. For all attendees, as explained by Dean Sonobe yesterday, ADBI has e-learning platform, which is expanding day by day. This event being actually the part of this ADBI e-learning platform. We encourage you to access this program and enjoy the various thematic courses available, not only the financial inclusion, but also other issues such as infrastructure, sustainable development, energy issues, and so on. So taking this opportunity, let me reaffirm that ADBI is committed to further refine the program based on the thorough evaluation and your feedback. So we are very looking forward to receiving your feedback. And then in the future, we look forward to working together for the sustainable development of Asian countries. Finally, taking the opportunity, I ask you to join me to showing our appreciation to all the people behind the theme. Firstly, mastermind of this event, Dr. Nella, and Dr. Vidya, and Derek, and Misuzu-san, and also ADBI outreach team led by David Hendrickson for many sleepless nights of the preparing this program. Thank you very much. So again, thank you very much for attending this webinar. I hope you stay well and stay healthy. Thank you very much.
You're welcome.
Thank you, Kim. So
Thank you.
now, and thank you for everyone.
Thank you, Pak Nella. Thank you, everyone.
Pak Jekal, yes.
Stay healthy.
Yes,
So,
thank you.
Take care.
Yes, thank you, Michael. Thank you.
Thank you.
Thank you, Mr. Pratipan. That's a good question.
I'm leaving too. Thank you.
Hi, thank you. Yes. Thank you, Ms. Dilhani. Yes. Mr. Pratipan, are you talking that your speaker still unmute? Are you? No? No, I mean, you need to unmute your speaker. It looks like you're talking to me, no? The speaker still unmute.
It's okay.